Hello, I'm Kevin Grimes, CEO and Chief Investment Officer at Grimes & Company. And I'm here to talk with you today a little bit about Bitcoin. And we're going to be reviewing supply and demand metrics to see the investment case or the impact on the investment case of the asset. And just as a reminder, the purpose of this piece is to explore why Bitcoin might be an asset worth understanding as a long-term holding in your portfolio. As always, this is not an investment recommendation. Recommendations should only be considered in the context of the suitability of each individual investor. And also, this is not a dissertation on the origins of Bitcoin or blockchain. And lastly, this piece pertains only to Bitcoin and no other crypto assets. So in a prior installment, we discussed why investors should consider embracing the volatility and investing in Bitcoin. And we looked at how over time, the returns have justified the risk and the diversification benefits of Bitcoin relative to other assets were advantageous for a portfolio. That piece was a little bit backward looking at measures and statistics of how Bitcoin has performed up until this point. This piece is meant to look forward a little bit to the investment case for Bitcoin. So we look at Bitcoin as an asset. Assets are a store of value. There's something to own. Think of Bitcoin as digital gold. It has intrinsic value for being a scarce, although virtual commodity for which there is demand. And the supply-demand dynamics of Bitcoin could be incredibly favorable for some time to come. So let's jump right in. On the supply side, unlike dollars or any currency where governments just simply create more and more every day, they will never be more than 21 million Bitcoin. The present supply is growing at about 2% a year and declining or growing at a slower rate every year, each year until all Bitcoin are mined and all 21 million Bitcoin are in supply. It is a finite resource. Bitcoin cannot be faked. It cannot be counterfeit. It's decentralized and independent. It's not governed or controlled by a government or a corporation or any entity. It cannot be manipulated, and participants cannot be denied. And another important aspect of the supply of Bitcoin is that it's infinitely divisible. So while there's a limited supply of Bitcoin, it can be cut into infinitely small or nearly infinitely small pieces that can enable demand despite higher and higher prices. So that means the asset can be purchased in any denomination, no matter how small, which can become a facilitator of higher prices as investors continue to add Bitcoin. Think of it in terms of when an investor goes and buys a mutual fund. They don't really think of necessarily how many shares of a fund they're buying. They think of how many dollars they've purchased or a dollar equivalent. It's a similar thing here. And just like how in the stock market, stock splits become necessary over time for companies to continue to drive demand from smaller investors and able to buy meaningful numbers of shares. The divisibility of Bitcoin allows smaller investors to participate in the purchase of Bitcoin. So certainly on the supply side, limited. It's one of the few truly limited assets in existence. On the demand side, I would say the most important change on the demand side of the equation for Bitcoin is the advent of a true Bitcoin exchange traded fund that became available in January of 2024. This was a watershed moment, a game changer, where investors can now purchase Bitcoin, an asset backed by physical Bitcoin, in brokerage accounts. So as investor demand grows, it's going to be very easy to invest in Bitcoin since it can be done in virtually any investment account with no need for blockchain codes or special crypto accounts through strange exchanges. You can buy it in your local, really in almost any investment account across the country. Going forward, you're probably going to see, among other assets or other, I guess, alternative investments, you're going to see access most likely in 401k plans. Fidelity Investments, it's the largest retirement plan provider in America, is pushing to have Bitcoin investments available on their 401k plans. And having the Bitcoin exchange traded fund is a medium for doing this. It could be a very easy or a much easier thing to accomplish. Companies like Tesla, MicroStrategy, and Stoneridge have actually purchased Bitcoin as an asset on their balance sheet. Some of these companies, instead of carrying cash or long-term cash or equivalents, they are holding Bitcoin on their balance sheet as a store of value. So these companies I mentioned, they are pioneers, but imagining corporate allocations to Bitcoin increasing in the future is something that seems pretty reasonable and could even become widespread among public and private companies. In addition, insurance companies that take a very long-term perspective in their general ledger investments and have a history of being very traditional. However, we are seeing several large insurance companies, including MassMutual Life and New York Life, both have disclosed purchases of Bitcoins in their general ledger investment account. This could be just the beginning of very large allocations from the insurance industry. And another big source of demand, government treasuries. More and more, you're seeing governments consider adding Bitcoin to their strategic reserves. Several have purchased Bitcoin so far. Strategic Bitcoin reserves could be more common in the future and represent another source of demand. So with a favorable supply and demand dynamics, one can argue that there's a very long runway for Bitcoin. With any asset, as the investment matures, you expect both risk and return potential to decline over time. Perhaps someday Bitcoin will have the same risk and return characteristics such as stocks or gold. And probably at that point in time, everyone will decide that it's acceptable to add it in their investment accounts. However, if you can accept higher levels of volatility to invest in today's highest returning asset class, long-term investors could be rewarded for doing so and feel comfortable doing so in the face of favorable supply and demand dynamics. So that concludes today's dissertation. We encourage you to visit other videos and other research of Bitcoin online, and you can always reach out to one of our financial advisors to discuss further as well. Thank you for your time and attention.